This is your weekly market update for the greater Portland, Maine area. These are closed sales in the last 7 days, median numbers. So days on market came down quite a bit to 9 days on market. The list to sale ratio still at 100%, so still a strong seller's market. Your close price came down a little bit to $525,000. The average 30-year fixed interest rate came down just a smidge to 6.27%. And of course, your US inflation at 2.9%, which is up a little bit from the month before. I got three things I want to talk about this week. The first one is the quantitative tightening period of the Fed Reserve is coming to an end. The second one is there a unique buyer window right now created by the US economy? And the last thing is America's debt addiction. So thing number one, since going into the end of COVID, we had 8% inflation, and the Federal Reserve said, yo, we have to slow the economy down. And so they started this quantitative tightening period where they raised rates to slow the US economy down. And recently, as you know, we have seen the job market drop out. We have seen inflation sort of start to stabilize, and we've seen the GDP grow, but less than wanted or less than expected. So all of these things, the Fed chair said in no uncertain terms this past week, the quantitative tightening period has come to an end. So this means we're expecting 99% a rate cut at the end of this month, and with 97% of certainty, a rate cut at the end of December. Both of those things obviously mean mortgage rates will likely come down. Next, so why is this a unique and good window for buyers right now? Well, obviously, if rates come down twice, that's going to mean your mortgage payment is also going to come down, improve your affordability. But in addition to that, right now, specifically in the US economy, you've got people still feeling the inflation of the last couple of years. You've got people nervous about the tariffs. You've got people nervous about the government shutdown. So they're feeling sort of frozen, like they don't know what they want to do. And for some buyers, if you're able to stomach those uncertain things, you can take advantage of the fact that your affordability just improved. Hopefully, you don't have a lot of consumer debt from the last couple of years. And if you are able to afford a mortgage right now and other people are unwilling to come forward, sellers are still selling, your negotiating position, your ability to get a better price and better terms is excellent right now. So don't pause, jump in. The third thing, very much related to that, is America has this massive debt addiction. From like the smallest person to the largest corporation, we use debt to get what we want in America. Recently, it was estimated that the average net worth of Americans is $1.06 million. Well, of course, that's not actually how rich we feel or how rich we are, because really, when you factor in debt, the average net worth is $192,000. And by and large, most of that net worth is in housing. So if people bought a house with debt and then that house appreciates in value, they now increase their net worth, right? Most other things that we buy with debt, not all, but most, do not increase in their value. So I use debt to go buy a car or a boat or something else. That thing becomes worth less as I pay off my debt. If I use debt to buy a house, that thing becomes worth more as I pay off my debt. My net worth goes up. So if you're a buyer right now and you can deal with the feelings around the US economy and still move forward, I'd highly encourage you to do that. Use our debt culture and time to help build your net worth with this opportunity right now. I hope that was helpful to you. If you have any questions, reach out anytime.